Gold prices have charged over $1,200 as Jim Wyckoff joins us on this edition of Technically Speaking. Hi, Jim.
Hello, Alex. How are you doing today?
Good, Jim. Thank you. So busy morning. Lots of data points out this morning. Disappointing. We saw gold just jump over $1,200. Now, is this just a knee-jerk reaction to some weak data points, or is this maybe a sustained rally?
Alex, that's a good question. I believe that today's bounce in gold was precipitated by the weaker than expected retail sales report. However, I do believe there are underlying factors that are also lending buying support to the gold market, including the recent slump in the U.S. dollar index, some safe haven demand due to Greece worries about their debt restructuring negotiations, and also the recent rout in world bond market that has really sent some jitters through the world marketplace.
Yeah, some excellent points there, and we'll start with Greece, who met their minimum requirements yesterday. Now, they're not out of the woods yet, though, are they?
It's just a Band-Aid, Alex. They did meet their 750 million euro payment on Tuesday, but there's more payments upcoming, and the negotiations, sometimes they're going well, sometimes they aren't. This is still a messy issue that's going to continue to be like a festering wound that just isn't seeming to heal.
And switching to bond markets, who have had a bit of a rough ride of late, it's been feeding the safe haven bid for gold prices. Do you see that continuing?
Alex, I do. I think that the gold market will continue to benefit from the uncertainty about the bond market, the rising yields worldwide. During a time when world economies are arguably in a just a lethargic state, it's been surprising. A lot of market watchers have said that the rising bond market yields are simply a fact of traders and investors being on the wrong side of a bond trade, and they've got to unwind those positions. It doesn't make any difference. Yields are rising, and what rising bond yields suggest is creeping inflation. And for the past many months, we've talked about deflation, and deflation is the arch enemy of raw commodity market bulls. Now that this inflation picture is becoming a little bit more pronounced, that's a bullish underlying factor for hard assets like the raw commodity markets, and it's bearish for the paper assets like the stock market. So if this inflation creep continues, and my bias is that it will, you're going to start to see money flow out of paper assets and into hard assets, and that's going to be bearish for the stock market and bullish for gold and silver markets.
And a nice segue to your Jim Wyckoff market ratings for the week. What do you have for gold and silver?
Alex, for June COMEX gold, I'm giving a Wyckoff's market rating of 3.5. That's the highest it's been in a while. We've got overhead support or overhead resistance at 1215, solid support at 1180. Silver market is even a little bit more bullish. We saw a strong upside price move today to a 6-week high. We've got the Wyckoff's market rating of silver at 4.5, which is just slightly in the bearish camp, but that could likely move over into the bullish camp here soon. Resistance for July COMEX silver at 1739. Solid support at 1648.
Beautiful, Jim. Thanks.
Thank you, Alex. Talk to you next time.
And before we let you go, there is a new segment that we've unleashed on Kitco.com called The Open with Jim Wyckoff. It's an audio cast that you can listen into daily. It's basically Jim Wyckoff giving you his morning thoughts on the market for investors and analysts. So enjoy that, and thanks for watching.